Trade Genius.
Hey guys, welcome to another edition of the Trade Genius podcast. I'm Philip and I'm with Bob Kudla as always. And today we got an interesting topic. It's oil versus Bitcoin going into 2023 and how does that look? And the answer might surprise you. So Bob, let's dive right in. So what's your take on this topic here?
Yeah, so I think it'd be really interesting because you and I come at it from two different directions. I like Bitcoin, and I would consider you a Bitcoin maximalist, and I'm probably an energy maximalist, and I like Bitcoin. And so it's really good to kind of test your conviction and test your understanding by looking at these charts in relation to each other. But before we get into that, maybe we should just talk about oil in general and energy. And you hear a lot of stuff about trying to curb inflation through energy. The Biden administration has been begging anybody who will listen to pump more oil and give more oil. And I want to show you why that's probably a fool's errand on his part. And number two is if the Fed is really relying on lower energy costs going forward, we're going to be in for a long series of, um, of rate increases because energy is probably, as a relationship to GDP, has probably hit its low for the next 5 to 10 years, and I think you're going to see why in the supply and demand imbalance area. And before anybody gets all hot and bothered about renewables are going to change the world, um, they can't compete yet. And it's 10, 15 years before you're going to have any kind of renewable competition nationwide. Some parts of the states can do it, and I can speak to that. I was in the renewable energy business, so I understand the space cold. And I think if people are relying on that, they're going to be relying on a lot of hopium. So let's make money and take advantage of people having wrong convictions because that's when you make the most money.
Right.
And with that, Phil, can you throw up the first slide for us?
Absolutely. So this is going to be the weekly U.S. field production of crude oil.
Yeah, so you notice that big spike, and you that was the Trump spike, okay, and then it's the Biden drop. And what they're doing now is, they're actually, believe it or not, we give Biden a hard time, but he actually on private land he's tried to help in terms of uh, remove obstacles, and on public land he kind of did a left-handed kind of compliment kind of move. He opened the lands up for drilling, but he put a high royalty on there, and people are like, well, screw that. I'm just gonna try to drill on private land. But some of the states aren't being very helpful, and I think combined with California and New York, where they actually can drill for oil and natural gas, they just make it very difficult for people to do so because of this ESG movement, which I think is going to get blown up. Having said all that, we're putting in a lower high on production and might be putting in a funky head and shoulder pattern here. And we'll have to look again once if we get a red wave, they may put pressure on the Biden administration to relent because they're probably not going to get their renewable funding and to try to push for more production. But right now, don't rely on increased production coming out. And if we flip to the next chart, I'll show you a monthly just to show you the deficit that they're expecting. Okay, this is the lower 48 new production. Okay, and if you notice the very bottom, the dark blue at the very bottom, so that's Alaska. So don't count on Alaska. And then the federal offshore, the Gulf of Mexico, is flatlining, coming up a little bit. So in the United States, basically, you're not going to get a whole lot of new production. The Saudis are cutting. Russia, we sanctioned. Africa doesn't produce enough. Canada's doing their ESG stupidity. And then the one chart I did send over and totally forgot is China demand is starting to lift too. So you're going to get the situation where you're getting demand increasing at the same time supply is struggling. If you give it the benefit of the doubt, it's going to struggle to keep up. It's going to put a floor under oil. People that I listen to in the oil markets, in fact, we have a client that trades it as well, basically says, hey, look for next year for average price to be around $110, and in 2024, look for average price to be about $135. So it's going to be very interesting to see if that plays out, what that means to oil prices and oil stocks, which I'm a big fan of. So not oil, they keep focusing on Phil on transportation. But if you look at this next chart, look at the demand for basically in the petrochemical space. People don't realize that you need natural gas to heat your home. You need natural gas to create glass. You need natural gas to create aluminum. You need natural gas to create fertilizer. And those industries in Europe are shut down right now. And so, and then plastics, as the world gets cleaner in terms of health wise, like in the third world, plastics are in high demand. Plastics are sterile. Plastics are basically antibiotic, in terms of, basically keeping bacteria away and cleanliness, and the list goes on and on and on. There's a list of 130 uses of plastics that aren't going away anytime soon. Demand's increasing on that. And so you can just see it. Look at the new cars. You can't have a new car that's lighter weight without plastic.
Right.
So on it goes. And so I think it's a fool's errand to think you're going to wipe out the fossil fuel industry. And, the Biden administration and these ESGs are trying to, and banks are trying to eliminate the fossil fuel industry. But they forget that transportation over time is going to become less and less of a component of the use of fossil fuels, and these other things are going to take charge, and it's going to put a natural floor underneath the price of oil and the production required. So, with that, I'll stop, Phil, if you have any comments on that, and agree, disagree, and, appreciate your thoughts.
No, I mean, I think that I largely agree with the oil demand scenario, and I think that, look, everybody, we'd love to be totally renewables, right? It'd be better for the planet, obviously. And I think that eventually even these oil companies will segue to that. But it takes time, right? You can't just do it overnight. And I think that's the mistake that's being made on certain fronts, that you're trying to get over to that sooner than it's really feasible. And it creates economic issues when you do that. But I think everyone's in violent agreement, but the timing there's a disagreement on timing, or philosophically there's a disagreement on timing. But I just think that's something you can't, it's like the laws of physics, you can't force it, right? We don't have the infrastructure in place, nor the technology or the costs are in place yet for really getting to where we want to be with renewables. But ultimately I think we're all in agreement. That's the great goal, is to get there, and it's going to be better for the planet, and what's better for the planet is better for our lives. So
yeah, and let me let you know a dirty little secret. Solar panels made with glass, aluminum, polysilicon, and copper, okay, all those require dense energy to manufacture.
Right.
And you're not going to use solar panels to produce solar panels, okay,
right.
anytime soon. So this notion that, we're just going to click our heels 3 times and we're going to have solar farms everywhere is ridiculous. Concrete, okay? Concrete requires, in the manufacture of concrete, cement requires a lot of energy. So, people are very simplistic. And when you get this simplistic thinking, that gives you opportunities to make money. And I think we're going to flip to a chart to show you one of the areas you can make money on it right now.
That is the chart of XLE. Let's go ahead and switch over to that.
Yeah, so as Phil knows, because he's in a room with me all day, is that all year long I told people to stay heavily invested in energy names. And in doing so, the market's down 25%. My long-term accounts are down less than 4.5%. And that's even with a couple stocks that are not doing well at all because of the energy names. Energy's been strong. They're throwing off a lot of cash. They're buying back shares. They're paying dividends. And I think the Biden administration has realized, or the market has realized, the Biden administration is impotent in being able to control the price of oil, other than draining our strategic petroleum reserves, which is a topic for another day.
Mm-hmm.
And so one thing here I've been watching is that, and Phil knows I probably own 14 or 15 different energy companies, but for the group, been watching XLE, and it pulled all the way back down to $68, you can see here. And now it lifted back up, and it's forming what they call a triple top. But in our world, there's no such thing, and it looks like a cup and handle. If you guys don't know what a cup and handle chart is, and I Google it, it's a high probability trade to make money. and it creates what's called a measured move. So if you look at the bottom of that chart around $68, the top's around 85. I'm just doing some fast math. You roll that thing up till you see a target. That target is north of $100. We went ahead and put that trade out for our subscribers today. This is when you just sit back and let the thing play out over the next 60 to 90 next 60 90 days, the next probably 40 trading days, and I think you're going to be well rewarded in XLE. And so this is just one area, and if you look at energy names just associated with that, these are the guys that produce the energy. So 2023 is going to be the year of trying to increase supply. They have to do it short term. Even if you're a renewal maximalist and you hate fossil fuels, okay, you're going to have to hold your nose for a year or two for them to replace Russian oil and gas, okay, until they get nuclear up, because you're not going to get enough solar in Northern Europe, okay? You're not going to get enough wind farms up in Northern Europe that's going to have energy cheap enough for you to have manufacturing industries. If not, you're going to become Euro Disney, okay? And that's all you're going to be, is a place for people coming as tourists. You're going to lose all your industry, and I guarantee you they're not going to let that happen. So with that stage set is that I love oil, I love energy. We will do a podcast and I'll talk about all the different sources of energy out there and how you could profit from it. It'll be a chart. I'll do a chart diorama for you guys, but maybe I'll do that for Saturday, just to show you some really good charts so you guys can make really good money across the energy spectrum. But what we want to talk about too is that I believe, a lot of people say, hey, at the end of the day, it's going to be gold and Bitcoin are going to be the competition for liability, but you got to throw oil in there too. So Phil and I were talking, want to say, hey, let's look going forward here. What's going to be the better risk reward if you had to pick one or the other, or if you're scaling out of one and scaling into another, what would you do? And so we pulled up a chart. I think there's a weekly chart. Phil, you want to throw it up there?
Yep.
Between the oil futures.
Yep.
And Bitcoin, and I'll just make a couple quick comments, and I'll let Phil talk because we're going to be moving into a halving cycle too, and so I think it's oil. Bitcoin's doing some really interesting things, and oil to me is kind of the competition, right? Not the dollar, but oil, and because oil's been really producing well against even all currencies, but we went ahead and that top dash line you see up there. This is the oil Bitcoin chart. Oil just ripped. Basically coming out of the pandemic, it basically outstripped any gains from Bitcoin. As you know, Bitcoin was retrenching from that beautiful move it made to about $65,000, and oil just took off, and it hit the top of its 2.3 standard deviation range. And if you know anything about us at Trade Genius, we love these channels, and 2.3 standard deviation is a really good measure for strong resistance, and we hit it against the price of Bitcoin. And we pulled back to what's called the moving VWAP, which is the moving volume average price, which is the black line on there. And we bounced, but now it's stuttering against Bitcoin. So, if Phil and I were going to do a bet next year, I'd be really worried betting oil over Bitcoin if that price ratio falls below black. And with that, I'll let Phil comment on that, because I think that's what might indeed happen. Even though oil may go up, as a percentage basis, I think Bitcoin will probably likely outperform it in 2023.
Yeah, and what's interesting about these ratio charts, okay, so it's not a matter of oil's going down and Bitcoin's going up. No, it'd be like they're both going up. So if you're in both, don't worry. But it's just a matter of what outperforms the other. And so both can go up, but one can go up more. And so what's interesting about, and something that we talk about in the room, and Bob and I have had many conversations about it, is that you can look at Bitcoin from its inception, and you can see that it's just been a black hole. Like if you chart most any asset against Bitcoin, Bitcoin's going to dwarf it in terms of value and outperformance. But now that we're getting into an age where Bitcoin's finding some price maturity and getting established in these higher ranges, now you're going to have pockets where other assets will have these windows where it outperforms. The oil chart was really interesting to me because it's been hard. It's hard to find something that can consistently have a run against the price of Bitcoin because it's hyperinflationary. It goes through these really intense hyperinflationary cycles. But what was interesting about oil, and you can see it on this chart, is that starting even back in April of 2021, that's where it put in the floor. and actually made gains against Bitcoin. It kind of based around, and then it really, right in that fourth quarter of 2021, took off against the price of Bitcoin. And it's hard to find anymore an asset that's able to do a multi-month run like that against BTC. And I really think that energy is the only sector going forward that has any chance of doing that for weeks and months at a time. So it's in a concept that's something you guys should probably look at. You can chart this yourself on TradingView, that CLI/BTC USD symbol, or you can use XLE if you want to look at the ETF or a sector. But watch the chart them, chart these pairs, and it can show you, like, if you're going to go into maybe in or out of them. If you're taking that approach, that's an interesting chart to chart and see when the turns happen, right? So, I just think it's interesting, depending on your trading style and what you're invested in, or if you're diversified and you want to wait maybe more into Bitcoin at certain times or wait more into energy at certain times, this type of chart, these ratio charts, are immensely helpful in regards to that. But I really I think energy, gold and some metals will have their spurts. They have had their spurts, but the windows of those spurts where they outperform are much smaller. And I think if we get into yield curve control, I think they'll have a chance to do a little more extended run, but we'll talk about that in another episode. But yeah, so this chart that Bob worked up for you guys, really important if you're diversified in both of them, because then you can weight your portfolio around how the chart swings. So
yeah, and you're right, everything will have its seasons, but my view is that, and Phil knows, because we've been trading together for a long time. I was a gold bug. I still am in a sense, but I like to trade the miners, but they have a bullseye on their back. And oil can have a bullseye on its back, but it's basically saying you can shoot every arrow you want at me, because there's just as many important countries that produce oil that don't want oil prices to fall. Versus right. Gold is a smaller market, and the Federal Reserves around the world can play havoc with it. They have a harder time playing havoc with energy. So that's why I look at energy and Bitcoin as maybe competition with each other in terms of where big money is going to try to hide out during this financial repression that we think is coming, and we talked about a little bit yesterday. And that's why we followed on with this conversation today, is that, okay, how am I positioning myself going forward? If they're going to take away the easy bond money trade away from me, and they're going to keep suppressing gold and silver, what markets are they going to have a hard time suppressing? Okay, they'll have a hard time suppressing Bitcoin for the obvious reasons of why Bitcoin is advantageous, and they're going to have a harder time, with energy, unless they lock everybody in their freaking homes and turn off the internet. Okay, I think it's the only way they win. If not, they're going to have to live with higher Bitcoin and higher energy. And I thought it'd just be an interesting parlor conversation here to see when you should be weighting one over the other. And we're not going to get into the war on maximalists and that. I'm a trader. I want to maximize my income. Okay. There's no reason why you can't have your core holdings of anything, but where are you going to put that incremental dollars? Okay, that's the important question, and that's where you create alpha over time. So if you're a maximalist, who cares what I say? If you hate Bitcoin, who cares what I have to say? But if you really want to look to maximize opportunities, you got to look at these ratios.
Yep. I guess at the end of the day, you want to be profit maximalist.
Exactly.
All right, Bob. Well, thanks a lot for this topic. Good research there, and that ratio chart was very telling, very interesting too. I wasn't expecting to see that result myself, but very eye opening. And I think look, at the end of the day, you've got two solid items here: Bitcoin and oil, that should perform very, very well going into 2023 and all through it, actually. So. Awesome. All right. Well, as always, guys, thank you for watching. Please hit like and subscribe and ring that notification bell. Spread the word. Really helps out our channel. It'll help us keep bringing you these topics. Thanks again for watching. Bob, thanks for being here. Appreciate it.
Thanks, Phil.
Take care, guys. Bye-bye.
Trade Genius.